But these pullbacks are very important, guys. It can determine whether you'll be profitable or not. We have impulsive, we have impulsive correction, impulsive correction, impulsive, right? And correction, 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 impulsive, correction, impulsive. Now, what did I explain here? Now, take note of this. It is not every bearish candle that is a pullback. Neither is it every bullish candle that is a pullback. For example, this is not actually a pullback. Why? Because this bearish candle never took this previous candle's low. So in a bullish market, we want to see price, let's say price is buying like this and a bearish candle comes in. We want to see price take out that before we know that, okay, that's a valid pullback. And that's the idea that we have when we want to identify our breakout. Okay, so for example, when we get to the breakout part, some of you might get confused, say, okay, but this one was just a one candle, this one was two candle, right, and the likes. It's not about the amount of candle, but it's about how it's formed. All right, so for example, this is actually a valid pullback. Why? Because this bearish candle took out the previous candle low and at the same time failed to take out this previous candle high. So automatically this becomes what? A pullback. Now, inside this pullback, look at this. This is actually a pullback right there. If we go to the lower time frame, this is what you will see. You see a pullback from there like this. Why? This candle, pullbacks is not about the color of candle, right? Because most times the color of candle is simply because of our brokers, the brokerage differences. Okay, so that's just by the way. So this is a valid pullback. Why? This candle did not take out the previous candle low, and at the same time it took out this candle high. So we have something like this. So this is, we don't have it like this, for example, no, or rather we have it like this. This is what we have. Like this, right? Like this, like this, like this. Okay, this is very, very important because it will determine whether you'll be able to identify your inducement or not. So for example, in this case, if I see this, I'm going to know, okay, this is actually an inducement. Why? Because that's a valid pullback. But if I see this, I will know that this cannot be a valid inducement because it is not a valid pullback. Okay, I hope it's clear enough. So we don't have to of course the PDF will be made available shortly, but I'm actually working on it for now. It's going to take some time, but all the same. All right, so I want you to remember this. It is very, very important. So when the price breaks above the previous candle's high or low or below its low, the candle's color does not matter. I've said that already. It can be either bullish or bearish, and both cases are valid. Additionally, when the price breaks the high or low, sometimes the candle will close beyond that level, or it may just sweep the previous candle's high or low without closing beyond it. Both situations are very valid. Now, I believe it's actually understandable. It's clear. It's the same thing I'm just saying now, right? I'm saying that even if this, for example, look at this candle. It did not take out this candle's low, but it took out the high. So it is valid. It is a valid pullback. All right, it's a valid pullback. Okay, see this one, for example. All right, even though we don't have a different color here, it's the same color that we have here. Though it is the same color, it is also a valid pullback. Because if we go to probably another broker, this might be a bearish candle. And if you don't understand this, you might get confused later when we start marking our key levels. So it is important that you understand this from the beginning. This is structure identification, and this is very important as well. So market structure is the foundation of price action, whether you are trading SMC, ICT, supply and demand, MSN arrow, whatever it is, right? And market structure is actually built on two major foundations, which is structure and liquidity. So in this session, we'll dive into understanding break of structure and change of character, which are essential for analyzing market structure. So to accurately identify and mark market structure, one critical factor is inducement. Take note of inducement. We're actually going to need it for our MSNR trading, which also helps to confirm the structure and provide reliable entry signals. Inducement play a vital role in defining the true market structure. So I will now guide you step by step on how to draw advanced market structure in various scenarios along with the criteria. So first thing is you need to identify break of structure. If we have a break of structure and we have a low, this low is not confirmed yet except there is inducement. So this X is actually our inducement versus pullback. So like I said earlier, we have a break of structure here. This becomes our what? Inducement. So this low is not confirmed until inducement is taken. So if we have something like this, for example, this, ouch, I have to take this back. If we have something like this, for example, okay, this high is not confirmed until this low is taken. So it is when this low is taken that this high is confirmed. Do you understand? And when this high is confirmed, then this low becomes a strong low. This is when we now have a strong low here. So this becomes a strong low. This is very important because we are going to need this especially for our entries. So basically this is the idea: break of structure, inducement, break of structure, inducement. So of course these are complex structures. Usually, where do we mark our inducement from? We mark our inducement from the left majorly, right? But there are some occasions where when we are trading MSN arrows, probably if we have other confluence, maybe we have a trend line confluence, we might also consider this as our inducement. But trading normal structure, our inducement have to come from the left side of the chart. I hope it's clear enough. So of course, when this form, let's say price comes and form this low right now, okay, what are we expecting? We expect that a price will pull back, right? Now remember I said this low is not confirmed yet except what? Except inducement is taken. And this high is not a strong high yet except inducement is taken. So it is inducement that both confirms the low and makes this high a strong one. So once inducement is taken, we are sure, we're kind of sure that we're kind of sure that price is willing to continue to our initial direction. So when do we now have a change of character? We have a change of character when the high that caused the break of structure that had inducement below it is violated. That's when we now have a change of character. So our trend have shifted. So the same way we saw this thing here, that's the same thing we are seeing right there. I hope it's clear. Is it clear, guys? Feel free. In case it's not, just let me know, okay?
Sorry, sir. Please come again with your character.
Okay. The change of character is this. Why is it called a change of character? It's simply because, look at this. We are bearish, for example. Price will keep performing the same thing. So price will keep reacting the same way, right? Take inducement, continue. Takes inducement. So we expect that price, that this should even hold price, but it failed. So that becomes a change of character. Then this one also, if this one failed, okay, we now know that, okay, price is now bullish. And you see, this one also failed. So what will happen is all these lows that was taking price down becomes our buy stop. So these are liquidity. So this becomes what? Our passive. This becomes our passive. And this becomes our aggressors. These are aggressors. Passive sellers or passive buyers, as it were, right? Of course, because when price is going down, they were selling, right? And when these people are coming, they are willing to what? They are willing to buy. They are willing to buy based on these selling prices. And that's why, in case you don't know, that's why we have prices beside our charts. You understand? Yes, that's why we have prices beside our charts. Now, so talking about roadblocks, of course, we're not discussing that right now. We're not doing that at all. Not now. All right. But let me chip that in now. If you understand this basic market structure, for example, we have a break of structure here, right? And we know that, okay, if inducement is taken, this becomes what? This becomes our low. But you must also understand that when price is coming to the downside, this could be potential roadblocks. Potential roadblocks, right? This could be potential. This could send price up further before pushing price to the downside. That's why sometimes price can even take out your point of interest, push up, and does what? And pull down. All right. So I hope we understand this.